Hi, Larry Gaines, PowerCycleTrading.com. In my free video last night, I went over the the correlation that the US dollar has and how it can really affect and push or build momentum to certain commodities that are related or tied to the dollar, such as global commodities, materials, gold, etc. And one is Freeport-McMoRan. So if you have a chance, go back and look at my free video from the 28th, and it was on kind of the setup, and then yesterday I went into more detail on the video last night. So what we're looking at here is Freeport-McMoRan, which is has a lot of a big percentage of its income comes from mining copper and gold and things like that. So it's very tied to the US dollar. So we set this trade up for our alert service at PowerCycle Trading right here on the 26th, and part of it was the chart pattern. You can see a breakout right here. So broke out from this descending trend line on the 22nd, and then we had we looked for a couple of different things that we look at. We look at what we call a momentum trigger that we got, and then a price trigger. So the price trigger was breaking back above this 382 retracement level right here, and then we got a moving average cross here that's a very kind of a catalyst for momentum. And then today we got another moving average cross right here. So it looks pretty decent for potential move back up towards 39 or 40. But the other big part of this trade that gives a great catalyst is the US dollar. So let's take a look at that, and then I'll show you the option trade that we did to take advantage of this potential move to the upside, and also the potential that if it does churn sideways, we'll get kind of paid while we wait. So let's take a look at the relationship that the dollar has to this Freeport, and then we'll look at the trade. So in my free video last night, I went to great detail to show you the kind of correlation between the US dollar's kind of an inverse correlation in metals, things like gold, things like copper, etc. And Freeport's one of them. So you can see here's the dollar index, and it peaked out right here on the 31st of March and then started trending lower, hard down. Now on that specific date, you can see here Freeport-McMoRan FCX pretty much close to the bottom, and then started trending up. So very, very correlated to that dollar moving down, copper, gold, etc. moving up. Now, so the technical setup was right here, breakout, reversal, and then our momentum indicators. So we signaled in a trigger right there. And then you can also see this was part of the trade when that dollar started breaking lower. That was also a good catalyst. So the trade setup, what we did in case the dollar kind of stalled here, was we did what we call a calendar diagonal. So let me show you the trade. So we went out to the 27 August series to have a lot of time for the trade to work if it did start to stall. And then we bought that long dated option, the 36 call there, $1.61, basically 161, and then we sold against it the short dated a 6 August. Now we had an adjustment that got us to this 6 August. We originally had the 30 July sold against it and covered that. So now we're long the 36, 38 here, calendar diagonal, and this trade went out today up about $57 profit here, right here as where it's trading right there, about 35%. Now next week, this expiration date is the 6th. So next week on the 6th, if it's still trading around here, this trade will be up about $108. And if we want, we could adjust this trade by closing out the short dated 38 August, and maybe if we think it's going to go higher, we could roll that short strike up to the 40 level, 42 or whatever, and play it for a bigger upside move. So if you like the strategy here that I just kind of went over, and you'd like to learn more about these types of trade setups, make sure to join me at PowerCycleTrading.com. Good luck trading.